Hey folks, so this is a quick update, a bit more on the timely front here, given the volatility we're seeing in markets here. And really my overriding theme here is really kind of one of it's too late to freak out. If you look at our YouTube channel, you look at Instagram and Twitter and all the other public things, or if you're a paying client, of course, you know, we have been proactively preparing people for a volatility spike, a move lower in equities, a mean reversion move, and certainly move higher in bond prices and lower in bond yields. And so I'm going to quickly flip the camera, go through a couple of charts, give you some perspective. And again, the main theme here is more of it's too late to freak out than there's anything else. So let's have a quick look at this. So we're going to just go through a few charts here in no particular order, but I just want to show you a few things. So here is yield on 30-year US Treasury. You can see, and I think this doesn't even take into account today's Monday, March the 9th move yet. The entire US yield curve is now below 1%. But you can see we're getting to the low end of the range of 30-year yield. So that's interesting, and lower end of the chart actually goes back further, but the lower end of the range, not the very low end. There's still plenty further to go from that perspective. So that's, you know, one thing. We're seeing an accelerated move in yields lower, an acceleration in move to the upside in price. To give you an idea of this, you can look at the futures price of oops, I need to take this one here. This is the inverse of what I just showed you, and it's that acceleration to the upside that I think is now panicky. And so again, if you didn't de-risk weeks ago and de-risk your particularly some of the tech sector, if you didn't buy bonds, I'm not saying you can't do any of that anymore, but I think for a good part for right now, it's probably too late. Yeah. So the flip side of that is that if you did do all that, or at least to some extent, I think we're getting much closer to a point where things get more interesting. So let me show you a couple of charts on that front. So we're going to use the S&P 500 futures contract just because it already takes into account at least some of the move here today. And we're going to give you that long-term perspective. This is the chart going back or stretching back to the beginning of the most recent secular bull market. And you can see that overshooting move obviously didn't last. You go back on YouTube, you can see I've probably done a dozen videos on that, or at least half a dozen videos over the past few months on seeing how that move is going to mean revert very quickly. It has now happened. But we're now finally getting to a better spot where reward to risk is slowly, although we may not be quite there yet, but it's slowly getting better. So that's the equity side. If you look at something like oil, obviously is the big one here this morning as things are moving, and you look at what's happening here. I'm going to make this a multi-year weekly chart, and certainly we could go even lower. Maybe oil goes to 20, but the reward to risk is starting to get better, and is better here than it was, I don't know, the past year, the past 2 years, really, for that matter. So again, this is not a call here right now to go out and buy anything blindly. But it is, I'm seeing multitude of signs of it's the confluence of things coming together where I think it's just too late to panic. Again, it doesn't mean that, I'm not giving you financial advice here. It doesn't mean that you can't de-risk some things if you still, way exposed to all these things. But I think the big panic is it's just too late now. Another way of looking at this is the VIX well above 50, I think, at this point this morning. That's the implied volatility index of the S&P. You can look at things like, I think if you look at the European sector, you look at the stocks 50 here. This is a weekly chart here too. We're now back at levels where we were in late 2018, early 19. Doesn't mean that we ultimately can't go lower, but I think the real freaking out here is probably the wrong thing to do. We're getting oversold again. I'm not saying this is a spot to buy, but it's just kind of too late to freak out. The freaking out point was 2 weeks ago, and quite frankly, the freaking out move really was on the way to the upside. And so let me just bring this back to full circle to our trusty S&P chart. The time to freak out, and that's where I was trying to ring the bell, for months and months. But this was the freak out point. This is where you should have freaked out, when things were overshooting in a dramatic, historic, I've never seen it like that before way. And here we are. So anyway, we're going to continue monitoring this for you and keeping you up to date. If you're a paying client, obviously you get the stuff daily. By the way, congratulations on those of you guys that took our short side trade in the SMH the other day. You made a lot of money already. And of course, those of you guys that have been long TLT for the past months. Well done on that. With that, I'll talk to you guys soon. Oh, subscribe and give us a thumbs up, like, and spread the word, all that good stuff. You know how to do it. See you soon.